Hello everyone, I'm Tim Tu. I'm investing in the last 5 years with a result of 17%. And I think one of the reasons that I achieved this result is because I invest in the active asset and I choose it very carefully. In the last video, I shared with you two best active assets that I'm looking at the moment. And today I would like to share the last active asset as a very powerful one. So if you did not watch the last video, please come back, because in this video I reviewed the two best assets at the moment, which is the good company stocks and the real estate. I think when you watching my video, you understand the importance of the active assets. The first reason which is it is important is because it will have the gain in every market condition. So which will reduce a lot of volatility in your portfolio, and then you will sleep well every night. It's very important in investing. And the second reason, very important one, is that it can help you to have a double gain in the market. And thanks to the assets that I will share with you in this video. So what is this asset? It's not a really secret, because we all know some of the great investors in the world. One of them is Warren Buffett, and Warren Buffett invests a lot of his money in this asset. So let me recall the context. The strategy of Warren Buffett is to invest in the active assets, right? He just invests in a good company when the market goes down, and he can't predict when the market go down, so he has to prepare a small sum of money in his portfolio to make it ready, so that when the market goes down, he reinvests, he buy this good company with his money, right? And the money sleeping in the portfolio will make no gain, right? And because of that, he will use this money to buy the treasury bond, which will yield a gain around 5% per year. And it is a fixed gain. But this gain is very important for him, right? Because it will guarantee a return of 5% in the money, and when the market goes down, he can use this money to buy the stocks of good companies. So the important things to understand about the treasury bond is that when you buy the treasury bond, it's like you lend money to the US government, and it will have a better gain than your saving accounts. When you open the saving accounts in the bank, you lend money to the banks. And so why is that? Why is the treasury bond will yield a better gain than the saving accounts? The reasons for that, I think, is important to mention, because that the banks need money to function, right? And the money they will lend from the individual investors like us, or they can lend from the governments. And when they lend from the government, because they lend a lot from the government, so they have to pay a higher interest rate. And when you buy the treasury bond, actually you lend money to the government, so that the government lend this money to the banks. So this is why the treasury bond will give you a better return than your saving account. It is always like that. And if you find that maybe in some countries, when you save money in the bank accounts, you get a return of 7-8%, but it's not never be a return in the dollar currency. Maybe it is a return in your local currency because of the inflation, and your local currencies lose value compared to the US dollar. And so this return around 5% is on the US dollar. The US dollar preserves value very good. So I think it's a very good strategy to invest some of your money in the treasury bond. And when the market goes down, you sell treasury bond and buy the good companies in the stock market. So I mentioned before that the active assets can help you to have a double gain. So this is the double gain. You get 5% in the treasury bond, and then you buy when you sell it and reinvest in the stock markets when the markets are in the bottom. So your investment in the stock market will go up a lot when the stock market recover and start a new boom. For the conclusion, in the two recent videos, I revealed to you 3 active assets. They are very different, right? Even that the functioning is quite the same. You buy something that will give you a return every month, every year. It will help you to have a gain in the market and reduce the portfolio volatility and help you to sleep well. To resume, if I have only one word to say for each asset to make a clear idea for you, I would say that there are three active assets. The first one is stocks of good companies. You can buy it all the time. It will have guarantee a good return in every market condition. The second is real estate. The real estate is a mix of sometimes it is active, sometimes it is passive. You need to buy it when the price is low. The third one is the treasury bond. The treasury bond will guarantee you a return, a fixed return every month, and whatever the market condition, you have always this return. So it is good to invest some of your money in the treasury bond, and when the market goes down, sell it and buy the company stocks. So it is for today. Thank you for watching. This idea will help you to restructure your strategy and to help you to find a good strategy to ensure the consistent earning in the market. See you next time. Bye bye.